Hey guys, it's just Matt here. Today I'll be answering a question. How much life insurance do I really need? So before we begin, life insurance is a strange thing. You can get it when you don't need it, but when you need it the most, you can't buy it anymore. For life insurance, you have to buy it when you're healthy. If the insurance company sees you as a walking health time bomb with a lot of health issues just waiting to explode, then I'm sorry, you can't buy life insurance anymore. So as a general rule of thumb, again, this is a general rule of thumb, aim for about 9 to about 10 times your annual income to cover for life insurance. Some people can have more, some people can have less. This is again a very general rule of thumb that has been calculated that is sufficient. If something does happen to you, if you pass away or you get permanently disabled, this amount will be sufficient to comfortably last the family. Of course, if you can't afford that much coverage, then having a little bit is still better than nothing, especially if you have dependents. The first thing you need to consider is this. In the first place, if you pass away, if you die, how will it impact your dependents? If the answer is you don't have any dependents and you don't have any debt or liabilities to pay off, then congratulations to you. You actually don't need life insurance. Or if you're retired and your kids are all grown up, they are working, they are independent, they are able to take care of themselves financially, then the need for insurance will drastically reduce for you. But it comes to this point, if you have people who rely on you, like a spouse or a young child, then you need to have sufficient coverage so that your loved ones don't have to bear the burden of paying off your debt if you leave this world a little earlier than expected. When asking how much life insurance we need to get for ourselves, we have to consider a few things. And let's be real, no one wakes up on a Sunday morning and starts calculating how much life insurance they need if they pass away. The fact is, we try to avoid thinking about such things because we as human beings, we want to live. No one looks forward to dying, right? You don't have to break your brain just trying to figure this all out. Hence, research has really shown that about 9 to 10 times your annual income is a safe and comfortable amount for most people. However, you flow with your own budget, flow with your own family situation. So here are some general guidelines that you can potentially follow. I think for me personally, plan sufficiently to cover your home loans first. This is probably the most important aspect. Make sure that your insurance is enough to cover any kind of major debt that you have. Secondly, if you have young kids, make sure you have sufficient money, you have a buffer to cover for your average family expenses until your child becomes old enough to work. And thirdly, if you're looking to sponsor their university fees, have that buffer in your coverage to fully pay off their university fees if that is what you wish for your children. If you're not around, you don't want your kids being forced to go to work earlier than expected, or worse, take on a big student loan just to fund their own education. For me personally, I prefer my spouse don't have to remarry if I'm not around, and having a life insurance payout is a form of emotional support where it actually reduces the mental stress for her having to go back to work and earn an income just to raise my son or just to support the family. And I want it to be done in such a way that, if I'm not around, my spouse can fully focus on being present. She can fully focus on raising my child, being there for the kid, especially when they lose a parent, which is quite tragic for a lot of young children. Not saying it's going to be easy. It's not going to be easy, definitely, if someone passes away. But having a life insurance payout relieves one aspect, which is they no longer have to worry about finances. And lastly, options. With money, you have options to hire help instead of, like I said, the widow being forced to go back to work. A common misconception that I get when it comes to planning for how much life insurance the person actually needs is this. Matt, I already have the home protection scheme covering my HDB loan, my home. I don't need any life insurance, right? Well, so first of all, the HPS, the Home Protection Scheme, covers your property and not you. When you change to a new house, you have to apply for a new HPS based on your health condition at that point in time. So just supposing after the HPS pays off any kind of outstanding loan if you pass away, where is the extra money going to come from to support the surviving family members? Are they going to have to dig into their savings? Are they going to have to withdraw their investments? Or worse, do they have to borrow money just to support their lifestyle? Or will your spouse be forced to go back to work in a difficult period, in an emotional period, just, to support the family? Think about it. I'd like to end with a quote. You don't buy life insurance because you're going to die, but because those you love are going to live. So when we plan for life insurance, it's because we care. This product is for people who care. This is for people who are responsible and people who have dependents that they need to look out for. So if you don't care, you have no dependents, then life insurance isn't for you. So as we end, just a summary, about 9 to about 10 times your annual income. That is usually a safe, a comfortable amount for most people without overthinking, without trying to figure out all the different expenses. Just a simple rule of thumb. Thank you for watching this video. I truly appreciate it. If you have questions or you'd like to connect, you can scan the QR code to connect with me directly on WhatsApp. Or you can also visit my webpage below, matthiasyeo.com. I'll put the link in the description below. Thanks again. I'll see you in the next one. Bye-bye.